Hello, my name is Simo from Investment Research. Welcome everyone. We are on the 1st of December 2025 for our daily analysis on SoFi Technologies. So let me tell you what we're going to cover today. I'm going to answer three questions that basically I think are on most important right now. First, does SoFi Bank valuation make sense at current levels after this massive run? Second, what's really happening with this crypto launch and should we care? And third, what are the actual catalysts that could move this stock between now and early 2026? I've done fresh research pulling the latest data, and I want to give you my honest assessment and recommendations for holding this stock on your portfolio. Okay, so first question, is SoFi overvalued after doubling this year? Look, I'm not going to sugarcoat this. The stock is trading around $29 right now, and we're sitting at roughly 50 times forward earnings. When I compare that to JP Morgan at 12 to 15 times or Bank of America at 10 to 12 times, I have to ask myself, what am I paying for here? Here's what the bulls will tell you, and honestly, they have a point. SoFi just reported third quarter revenue of $962 million, which is a record. They're growing revenue at 38% year over year, while traditional banks are growing at maybe 3 to 5%. They've got 12.6 million members. They're the largest online lender in America, and they finally turned consistently profitable. So the growth differential is real. But here's where I push back on myself. The broader lending market is only expected to grow 5.4% in 2025. Personal loan originations, which is core to their business, are forecast to grow just 5.7%. So the market is pricing in SoFi massively outperforming these industry averages. Can they do it? Maybe. They've got 60% market share in student loan refinancing, but when I look at the Fed's most recent beige book from November 26th, I'm seeing consumer spending declining and mixed reports on loan demand. That makes me nervous because SoFi targets middle and upper middle income consumers, and if that cohort starts pulling back, we're going to see it in their origination volumes. The other thing that concerns me is analyst consensus. The average price target sits at about $24.70, which is 13% below where we're trading today. Now, I've seen targets ranging from a low of $12 all the way to $38. That massive spread tells me nobody really knows how to value this company right now. And when you've got that kind of uncertainty, you need to be careful about chasing momentum. So my honest answer, if you bought this under $20, congratulations, you've doubled your money. I'd be taking 20 to 25% off the table here to lock in gains. If you don't own it yet, I'd wait for a pullback to 26, maybe 25. That's where the risk reward starts making sense for a new position. For my second question, what's the deal with crypto and does it actually matter? Okay, this is interesting, and I think a lot of people are sleeping on this. SoFi just became the first nationally chartered bank in the United States to offer crypto trading directly in their app. This launched in November just last month. Now, I've heard people say who cares about crypto or it's just a gimmick. But let me walk you through why I think this could be more significant than people realize. SoFi has 12.6 million members. If even 20% of those members start using crypto services, that's 2.5 million crypto users. At typical trading spreads, we're talking about meaningful revenue that's capital light and high margin. And here's the tell, JP Morgan increased their stake in SoFi ninefold to over $1 billion in the third quarter. That's not a small bet. They clearly see something here. When I look at competitors like Robinhood doing well with crypto, I think there's a real opportunity for SoFi to capture younger users who want an all-in-one platform. But I'm not blindly bullish on this. SoFi actually shut down their crypto offering once before in 2023 as a condition of getting their banking charter. So regulatory risk is real. If there's any tightening of crypto regulations, they could be forced to scale back again. That said, the fact that they got approval this time from the OCC suggests the regulatory environment has improved. The other piece that excites me is the fee-based revenue model. Crypto trading generates interchange and transaction fees without requiring SoFi to hold risky assets on their balance sheet. This fits perfectly with their broader strategy of moving away from pure lending toward diversified financial services. In Q3, their financial services revenue grew 76% year over year to $420 million. That's the kind of revenue Wall Street rewards with higher multiples because it's less capital intensive. So does crypto matter? I think it does, but we won't know for sure until we see adoption numbers in the Q4 earnings report. If 20 to 30% of members are using it, that's a game changer. If it's under 10%, then it's disappointing and the stock could sell off. For my third question, what are the real catalysts between now and early 2026? This is where we need to get tactical. I'm watching several things very closely. First, the Fed meeting on December 9th and 10th. If they signal only one rate cut for 2025, which is what recent guidance suggests, that's a headwind for SoFi's refinancing business. When rates stay high, people with low-rate mortgages don't refinance and student loan refinancing activity slows down. On the flip side, if the Fed surprises with a more dovish tone, that could be a catalyst for the stock. Second, and this is critical, we need to watch December member growth trends. SoFi has been adding members at an incredible pace, 35% year-over-year growth in Q3. If that momentum continues into Q4, it validates the growth story, but if member growth slows, we've got a problem at a 50 times multiple. Third, I'm watching deposit growth very closely. SoFi ended Q3 with $32.9 billion in deposits, and 90% of that comes from direct deposit members. That's sticky, low-cost funding, which is gold for a lender. If deposits keep growing 10 to 15% per quarter, that gives them cheap capital to fund loans and improves their net interest margin. Fourth, credit quality. I'm seeing credit card delinquencies hit 11% across the industry, the highest since the Great Recession. Auto loan delinquencies are climbing too. Now, SoFi's charge-off rate is only 2.6%, which is solid, but the overall trend in consumer credit is deteriorating. If we start seeing their loss provisions tick up in Q4 or Q1, that's a red flag. And then there's the big one that everyone's talking about, S&P 500 inclusion. With sustained profitability and a market cap that's growing, SoFi is becoming eligible for S&P 500 inclusion, probably sometime in 2025. When that happens, you get automatic buying from index funds. We saw what happened with Palantir earlier this year when they got added. The stock jumped just on the announcement. That could be a significant catalyst. The Q4 earnings report, which should come in late January, is going to be the next major inflection point. If they report over $1 billion in revenue and give strong Q1 guidance, this stock could run to $32, maybe $35. But if guidance disappoints, or if crypto adoption is weak, I could see us quickly back at $26 or even $24. Look, for me, the crypto launch is bold. The shift to fee-based revenue is the right long-term strategy. Management is executing well, and much more positive things, and maybe a lot of other things are coming soon. But at $29, after doubling year to date, I think the easy money has been made. We're now in a phase where execution has to be absolutely flawless to justify this valuation. One stumble on guidance, one miss on member growth, one tick up in credit losses, and we're back in the mid-20s very quickly. The macro environment is also getting tricky. Consumer spending is declining according to the Fed's Beige Book. Lending growth industry-wide is only expected at 5 to 6%. Interest rates are staying higher for longer. These are headwinds that SoFi will have to overcome. If I'm already in this position, I'm taking some profits here. If I'm watching from the sideline, I'm patient. I want to see how Q4 shapes up. I want to see those crypto adoption numbers. I want to see if they can maintain that 35% member growth rate. December historically is a strong month for stocks, but with the Fed meeting coming up and elevated valuations across the market, I think we could see some volatility. SoFi has a beta of about 2, which means if the market drops 5%, this stock could easily drop 10%. So that's my analysis for December 1st. I'll be back with updates as we get more data. If you have questions or want me to dig deeper into any specific aspect of SoFi's business, let me know. Thanks for watching, and I'll see you in the next one.